The crypto world is buzzing with activity, a constant hum of innovation, speculation, and of course, news. Every day brings a new development, a fresh angle, or a surprising twist. And right now, a significant portion of that buzz is focused on the Pi network. It's a project that has captured the attention of millions worldwide. Millions have been diligently mining Pi on their smartphones, tapping a button each day, fueled by the hope that their efforts will eventually translate into real-world value. They've invested their time and belief in this project, patiently waiting for the next big step. The big news that's got everyone talking? MEXC, a well-known and respected major cryptocurrency exchange, has just announced the listing of a Pi/USD1 trading pair. This is a significant event marking a potential turning point for the Pi network. Essentially, MEXC is pegging an IOU for Pi to a stablecoin, USD1. This means they are creating a derivative product that represents Pi, even though the actual Pi coin isn't yet fully tradable. For Pi's massive and dedicated community, this listing represents the first tangible sign that their collective efforts might actually pay off in a meaningful way. It's a validation of their belief in the project's potential. The listing provides Pi with a visible price point, something the community has been eagerly anticipating. Now there's a chart to follow, a tangible representation of Pi's perceived value in the market. This has, understandably, sparked a wave of excitement and speculation within the Pi network community and beyond. People are eager to see how this IOU performs and what it signals for the future of Pi. However, it's absolutely crucial to be clear about one key aspect. This is an IOU. It's a promise, a placeholder. This is the real, fully transferable Pi coin that users have been mining on their phones. There's a fundamental difference. The Pi network's mainnet, the actual blockchain where Pi transactions will be recorded, isn't open to the public yet. This means you cannot currently move your mined Pi from your phone to MEXC or any other exchange. Therefore, MEXC's IOU is essentially a placeholder, a temporary representation of Pi's potential value. It's a promise from MEXC to deliver real Pi coins to IOU holders once the Pi network mainnet officially launches and users can transfer their mined Pi. This introduces an added layer of complexity and, importantly, risk. Trading IOUs always carries inherent uncertainties. Therefore, it's absolutely crucial to fully understand what this MEX listing signifies, and perhaps even more importantly, what it signifies before making any decisions. So the big question remains, is this IOU listing the true start of Pi's ascent in the crypto world, or is it simply a wave of hype and speculation? In this video, we're going to break down exactly what a trading pair is, explain why this particular listing matters to the Pi community, and delve into what this could potentially mean for the long-term future of the Pi network and the value of the Pi coin. We'll also take a close look at the reactions within the Pi community itself, ranging from unbridled excitement and optimism to cautious skepticism and concern. Ultimately, our goal is to provide you with a balanced and no-nonsense perspective on this development, cutting through the noise and offering clear, objective analysis. So let's dive in and explore the implications of this Pi network listing on MEXC. You hear trading pair a lot in crypto, especially if you're exploring different exchanges or reading up on market analysis. It's a fundamental concept, but it can be a little confusing at first glance. So, let's break it down and make sure we all understand what a trading pair really represents in the world of cryptocurrencies. But what does it mean? What are we actually doing when we engage with a trading pair? Think of it like exchanging dollars for euros at the airport. You're giving up one currency to receive another based on the current exchange rate. This is a very common practice when traveling internationally. In crypto, a trading pair lets you swap one coin for another. It defines which two cryptocurrencies can be directly traded against each other on an exchange, like BTC ETH. This means you can trade Bitcoin directly for Ethereum, or Ethereum directly for Bitcoin. It's a two-way street. Or now, Pi/USD1. This is a relatively new pairing that's generating a lot of buzz. The Pi/USD1 pair is significant, and we're going to delve into why. It represents a crucial step for the Pi network, because USD1 is a stablecoin, pegged to the US dollar. This means its value is designed to remain relatively constant, mirroring the value of the dollar. Stablecoins make it easy to see a coin's value in real-world terms, providing a more stable benchmark for evaluation, cutting out the confusion of volatile assets. Instead of constantly fluctuating values, you get a clearer picture of what your crypto is worth. For Pi, this is its first bridge to the broader crypto market, a connection point that allows it to interact with the wider world of digital currencies. A public price reference, even if it's just for an IOU. This provides a starting point for understanding its potential value. Having a stablecoin pair is a milestone for any project, signaling a move towards greater legitimacy and market integration, making it more accessible to new investors. Stablecoins offer a less intimidating entry point into the often complex world of crypto trading. It allows for price discovery, a crucial process in determining the true value of any asset, where the market decides what Pi is worth. Supply and demand will ultimately dictate its price relative to USD1. You can sell Pi for USD1 and avoid wild price swings, providing a safe haven during periods of market turbulence. Or buy in when you think the time is right. This allows you to strategically accumulate Pi when you believe it's undervalued. This listing gives Pi a market-driven, if speculative, price tag. It's a starting point for understanding its potential value in the open market. It's a step out of Pi's closed ecosystem, where its value was primarily internal and community-driven, and into the global crypto conversation. It opens up Pi to a much wider audience and potential user base. Even as an IOU, it's a critical move for Pi's visibility, putting it on the radar of traders and investors worldwide. The market now has a number to watch, a tangible metric to gauge interest and potential growth. And that changes everything. It marks a significant shift in how Pi is perceived and valued. Let's see what Pi Network is all about, and how this new trading pair might shape its future. Pi Network launched in 2019, aiming to make crypto mining accessible to everyone, right from your smartphone. Users simply tap a button daily in the app to earn Pi coins with a referral system to boost mining rates. This simple model attracted tens of millions worldwide, but Pi has always operated in an enclosed mainnet. Users can't transfer or sell their coins yet. The team says this phase is for building utility and verifying users through KYC. This long wait has built both loyalty and skepticism. The MEXC IOU listing is the first external sign that Pi might soon have real tradable value. For many, it's a long-awaited glimmer of hope. A major exchange listing is a game-changer for any crypto project. It brings liquidity, making it easy to buy or sell without wild price swings. Visibility skyrockets, exposing Pi to millions of new potential investors. MEXC's promotion means more eyes on Pi than ever before. A listing also adds legitimacy. Exchanges vet projects before listing them. For Pi, which has faced skepticism, this is a powerful signal, even if it's just for an IOU. Listings often trigger a price surge as traders rush in, though corrections usually follow. For Pi, the psychological impact is huge. It's finally on the map. The IOU status adds a twist, but the excitement is real. This is a pivotal moment for Pi's journey. The MEXC listing sent shockwaves through the Pi community, a seismic event that triggered a wide range of reactions. This unexpected development has become a major talking point, dominating discussions across all Pi network channels. The news spread like wildfire, igniting both excitement and apprehension among pioneers. While some are ecstatic, viewing this as a monumental victory and a sign of things to come, others remain wary, approaching the situation with caution and a healthy dose of skepticism. This division highlights the complex feelings surrounding Pi's journey. Longtime pioneers who have dedicated countless hours to mining and supporting the project see this as long overdue validation of their efforts and belief in the Pi network's potential. For them, it's a moment of vindication. Social media platforms are flooding with celebration posts as users share their excitement and optimistic predictions for Pi's future. The hashtag #PiNetwork is trending, filled with celebratory messages and expressions of hope. They believe the IOU listing, despite its limitations, is a significant step toward the open mainnet launch, bringing the project closer to its ultimate goal of a fully functional and decentralized cryptocurrency. This listing also provides an initial glimpse into a real market price for Pi, offering a tangible, albeit preliminary, valuation of the digital currency. This is a crucial step in establishing its worth in the broader crypto ecosystem. But skeptics, both inside and outside the community, warn against getting carried away by the hype. They urge caution and a realistic assessment of the situation. They emphasize that the IOU price is purely speculative at this stage and is not backed by real transferable Pi coins until the open mainnet is launched. This distinction is crucial to understand. They caution that the price could crash dramatically once the mainnet opens. This potential volatility is a major concern for many. The fear is that once the mainnet opens and millions of users attempt to sell their Pi, the market could be flooded, leading to a significant price decline. This scenario is a key point of contention. The debate is intense, a clash of perspectives and predictions that reflects the uncertainty surrounding Pi's future. So is this genuine progress toward a valuable cryptocurrency, or is it simply a wave of hype and speculation that will eventually crash? This is the question on everyone's mind. Both sides of the argument have valid points, grounded in different interpretations of the available information and varying levels of risk tolerance. Excitement is undeniably high, fueling enthusiasm and optimism, but so is the risk, given the speculative nature of the IOU and the potential for market volatility. The community is energized by this development, but the future of Pi remains uncertain, dependent on the successful launch of the open mainnet and the subsequent adoption and utility of the cryptocurrency. This tension between hope and skepticism is shaping Pi's next chapter, a critical period that will determine its long-term success and viability in the competitive cryptocurrency landscape. With the IOU listing, price predictions for Pi are everywhere, but take them with caution. Optimists point to Pi's huge user base as a bullish sign predicting strong demand and high prices if the ecosystem grows. Some forecasts even see Pi reaching double digits if the project delivers. Realists warn of massive selling pressure when the mainnet opens, which could drive prices down. Most agree, Pi's true value depends on its utility and the success of its ecosystem, not just hype. The IOU price is just a speculative placeholder. The real test comes when the mainnet opens and the market finds a balance. Volatility is guaranteed, so stay alert. The MEXC IOU listing is exciting, but it comes with serious risks. An IOU isn't the real coin. It's a promise from the exchange to deliver Pi later. The IOU price may not match the real Pi price when the mainnet opens. Early buyers could lose big. If millions rush to sell, the price could plummet. There's also project risk. Delays or technical issues could make the IOU worthless. And don't forget platform risk. You're trusting MEXC to honor its promise. In crypto, not your keys, not your coins still applies. IOUs are speculative and depend on both the project and the exchange. Know the risks before jumping in. Caution is key in this speculative market. If you've been mining Pi, the MEXC listing is a big psychological win. It shows the world is watching. For the first time, Pi has a public price, even if it's just an IOU. This boosts confidence and could motivate the team to push for mainnet launch. But remember, you can't sell your mined Pi yet. The IOU price doesn't make you rich overnight. It's not the real market value. Stay optimistic, but grounded. Celebrate the milestone, but don't get carried away. Keep up with official updates, complete your KYC, and wait for the real mainnet. The IOU price is just a preview. The real journey for Pi's value is just beginning. Patience is still your best asset. Looking ahead, the biggest milestone is the open mainnet launch when Pi becomes a true public cryptocurrency. Watch for updates from the Pi Core team on KYC progress and new apps in the ecosystem. More utility before launch means more reasons to hold Pi, not just sell it. Also, keep an eye on other exchanges. Will Binance or Coinbase list Pi IOUs next? Official partnerships with major exchanges would be a huge confidence boost. Stay informed, don't make rash decisions based on IOU prices, and secure your account. Pi's story is still